Warren Buffett warns against casino-like investor behavior, what you should do to protect yourself. What about the missing link for retirement savers? All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts, Mark Stimson and Casey Elkins. Between the two of them, 42 years combined experience. You can find them at Elevated Financial Management right here in Seattle. Again, certified financial fiduciaries. It's all about getting their clients ready for retirement. I'm Morgan Patrick. Want to remind you there's a wonderful resource website. Check out efmnw.com, all letters, efmnw.com. Again, links to the TV show, our radio shows, and podcast form, so great information there. And as always, before we jump in, we've got some great articles to talk about. Casey, how you been?
Been good. Yeah, doing great. I think, we just got back from a nice trip. A couple times a year, we get together with other financial planners from across the country, and we just share ideas, right? We talk, and we want to try and figure out how we can provide the best for our clients and what we see coming, and how we can do things better, right? And so we did that. It was great. We kind of got a little work in and a little play at the same time, so that was nice. We did a river cruise down the Danube River in Europe, and it's my first time to Europe, so I just got to see all kinds of things that I've never seen before, and it was a really cool learning experience. I'm far from a history buff. That is not. Right. I'm a numbers guy, right? I'm far from a history buff, but I had a great time. Really saw some cool things, and we got to spend a little bit of time in Rome, which was great. And I'm Italian and Portuguese, so it was kind of nice to see everything over there. And yeah, we had a really good time. It was a lot of fun, so it was great.
Yeah, I mean, the food's terrible, though.
Yeah, it's hard to get a good meal over in Rome, right? Yeah. No, it was awesome. It's just, it's hard to get a bad meal there. There's just great food on every corner. And if you know me, I'm a big ice cream guy, so I got to have gelato all the time, which was great. And, if you think that there's a lot of Baskin Robbins and Cold Stone and things like that around here, you have no idea. Go walk the streets of Rome. It's just, there's a gelato shop, 2 doors. It's like Starbucks around here, right? There's a Starbucks on every corner. There's a gelato shop or 2 on every corner, right? So it was great, man. It was really nice. And I think probably a highlight for me was we went to the Colosseum. And that was really cool.
Are you not entertained?
Yeah, exactly, right? And nobody said that while we were there, which I was kind of surprised by. I was expecting one person to do it. Kind of surprised it wasn't me, actually. But no, it was really cool. Got to see some exciting things, and it's really cool to see a part of the world that just has so much history and that's got so much intent with their buildings and their designs and their architecture. And you just can see the effort that they put into it.
Sure.
And I think that's so special. And, that intent thing kind of brings it back to what we're doing today, right? When it comes to finance. And I think that's something that people miss, right? Is intent. I think all too often people are investing in their 401k because it got set up when they got hired 30, 40 years ago. And that's the recipe. That's what you hear. That's what you do. You just contribute to your 401k. And that's good, right? You do need to contribute, but what is the intent? What are you really saving for, right?
Sure.
And
what's the big picture?
Yeah. Ultimately, it's with an eye to retirement, which means that you've got to turn that savings into income. And so what is the intent? And when we have a plan, that helps us be intentful with how we invest. It allows us to have a purpose. And all too often we see people have statements, they don't have a plan. They have a statement, they don't have a true portfolio, something that's diversified. They just have a bunch of holdings. I call them UFOs sometimes, unidentified financial objects, right? So you just have these things in your plan, and it's like, or in your statement, right? And it's like, you don't really know what it is, but hopefully it does well, right? Hopefully it grows. Hopefully I don't lose too much when the market goes the wrong way. But it's very hopeful, right? So you got to have a plan to really set yourself up the right way.
Well, here on Elevate Your Wealth, we're normally a three-headed monster. You got Casey, you got Mark Stimson, again, father-in-law to Case, and of course, I'm here, but Mark's still on assignment. We don't know where he is.
I abandoned him in Europe. He's
He's gallivanting across the globe.
What's that show, Naked and Afraid? Something like that, right? He's over there trying to figure it out.
Yeah, if he's naked, we're all afraid, right?
Yeah, exactly.
Yeah. So anyway, Mark is still on assignment, but we have fun here. We talk about the importance of having a plan, but we also focus in on just how important it is to make sure that roadmap is good for you. And it's going to be different for everybody out there. So here on the program, we've kind of adopted this, hey, what's hot? What are we talking about? What's the latest? And in case you've found some articles, we're going to start with Buffett's warning of casino-like investor behavior should be heeded. This caught your eye. Obviously, Buffett is he's a magnet. He's a spotlight when it comes to investing. But why did this jump out at you?
Well, yeah, just like you said, right? I mean, I think anytime Buffett talks about the investment world, talks about stocks or bonds, his portfolio, whatever it may be, people sit up and listen. They take note, and they should, right?
Yeah.
An intelligent man, somebody who has done much better than almost anybody else, and for a consistently long time frame. So when he speaks, even the financial world sits up and listens, right? And so when I saw this, I thought it was interesting, one, because it's him, and two, the headline just really caught my eye. Casino-like investor behavior. You know, that really is an apt description. I mean, we have folks, Morgan, you know this, right? And anybody that listens to the show for an extended period of time, we have folks that come into our office for the first time every single week, maybe even multiple people a day, first time in our office. And we do the same thing for everybody. We offer an analysis to talk about where they're currently at, and if there's any concerns that we see, if there's anything that could be done better or different, any blind spots maybe in what they're currently doing for their plan. And this idea of casino-like investor behavior, we see it all the time. I see it every day, where we're taking a gamble, and whether people realize it or not, it's red or black. That's how it looks from an analysis perspective. And we see a lot of people, because of what we call recency bias. We've talked about that on the show before, but just as a refresher for everybody, recency bias is just the idea of things that have happened most recently will continue to happen, right? Yeah, right. That's what's fresh in our minds. Yeah. And what's fresh in our minds is that the S&P 500 always does well, right? That is what is fresh in most people's minds. And we see people taking risk probably more than they realize, and probably more than they're actually comfortable with, because they believe it's going to be successful. And I certainly hope that it is, but that does not mean that 2008s don't happen. That does not mean that 2000s don't happen. That does not mean that broader market issues don't happen. They do, and so we have to be prepared for them.
Well, and think about it. We've kind of been lulled to sleep. I mean, 13, 14 years,
right?
You know, with maybe a little bit of a blip with the pandemic, but it came right back. So, I mean, everybody's out there and they're like, hey, it's going to be fine. We're going to keep on riding and riding and riding. But you got to plan for when there's that dip, and the dip's coming. That's it, right? Is when that dip comes, if you just have a portfolio, if you just have a statement and you don't really have a plan, that's going to hurt more than it would if you had a plan, right? That's not to say that if you have a plan, you're just not open to any risk in the market. That's not the point, right? But again, it comes down to intent. And if the goal is to retire, which is what we do, right? We're retirement focused. If the goal is retirement, ultimately we have to create income, and we have to do it in a sustainable way, and we have to do it in a reliable way. And a portfolio that's built for growth is exactly that. It's built for growth. It's not built for income, right? And so there's a shift. There's a mindset change that has to happen. And that mindset change comes on the cusp of understanding that broader market downturns do happen, and that what goes up must come down. It cannot continue forever. Now, we're not market naysayers, right? That's not the idea. But it is a reality check of, okay, if we are taking X amount of risk, do we know that? And are we truly comfortable with what the potential downside is? Yeah, it's great. It's fun. It's exciting to talk about the potential upside, right? And I love talking about that too. And I've got investments that have done great. And we've seen folks out there that are doing really well. And we have people that come in all the time that have had awesome growth over the last 10, 13 years, right? But does that mean it will continue forever? And here's the bigger thing. If we have that downturn right before you go to retire, 1, 2, 3, 4, 5 years before you go to retire, you may not be retiring when you thought you were going to, right? Because that downturn will have a negative impact on how much income you can take. And the same is true if it happens in the first few years of retirement. If you retire now and then we have a big market downturn and you have not planned appropriately, in the next couple of years we have that downturn,
that's gonna throw a wrench into things for you. And so we really have to be, again, have intent and be careful with how we put things together.
Well, and balancing, as you're basically describing, balancing your risk and where you are on your time horizon, that takes planning. Now, the opportunity to get on the calendar with Elevated Financial Management. During the course of this show, each and every week, we open up appointments. They are complimentary. Casey's going to tell you about them. We're going to fill them up, and these are complimentary. So, Case, walk us through it.
Well, these appointments are for those that want to have a no pressure, no obligation conversation about your individual circumstance. You'd like to have an analysis on where you're currently at and talk about where you'd like to be. Talk about what your goals are for retirement, when you'd like to retire, what kind of income you need, when you'd like to time Social Security, what you're going to do about Medicare. We talk about all these things because that's what makes up a retirement plan. This is a plan put together by our team of certified financial planners. And it's custom tailored to you and for what you're looking to do. This is not a one-size-fits-none cookie-cutter type plan. It's custom tailored to what you need. Don't hesitate. Pick up the phone. Give us a call.
If you've saved $250,000 towards your retirement, these strategies are going to work best for you. Call this number now. Pick up a complimentary appointment. And again, meet with Elevated Financial Management. 866-668-3625. That's 866-668-3625. Again, you're leaving the checkbook at home. This is a opportunity for first-timers. You're sitting on the portfolio and you're not planning yet, jump on it. Or if you need that second opinion, 866-668-3625. Call Elevated Financial Management right now and grab one of these complimentary appointments. 866-668-3625. When we return, we'll continue with more articles. Why Boeing workers rejected a new contract. We'll talk about that coming up next. Welcome back in to Elevate Your Wealth. Your host, Casey Elkins. Mark Stimson is on assignment. Elevated Financial Management, where you can find both these gentlemen right here in Seattle. They've got 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for retirement. They are certified financial fiduciaries. I'm Morgan Patrick. My privilege to go back and forth with the fellows, and we always talk retirement, the importance of having a plan. But we also give you an opportunity to take action on your own behalf. That's right. We have complimentary appointments available during the course of this show. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. How do you grab an appointment? How do you move to the front of the line? How do you get into the queue and get right to the top and claim the appointment? You call this number, 866-668-3625. That's 866-668-3625. If you're sitting on a portfolio, haven't started planning, a perfect candidate. If you're in the middle of something, you're frustrated not being communicated with your current advisor or advisory firm, second opinion. Grab it. 866-668-3625. All right, next article up. Again, we talked about Buffett, things he's thinking about. Always very interesting discussion point. Now we're going to move to the B word that in this market heads turn. Why Boeing, here's the article, why Boeing workers rejected a new contract, and it centers around retirement benefits. But Casey, obviously, this, Boeing it's always a big story. Always.
It is, yeah, right, and massive employer in the Seattle area, and so we've got a lot of clients that work at Boeing, and we've got a lot of clients that worked at Boeing feeders, right, companies that supply things to Boeing in the area, and so when something happens for Boeing, it's undoubtedly national news, but it's big news in the local area because it has a big impact on the local folks here, and like I mentioned, we've got a lot of clients that are used to work at Boeing, right? They're retired now. We have a number of clients that still work there, and we have a lot of friends that work at Boeing, right? So it's just whenever I see Boeing in the news, I think of all those folks, right? And even the ones that we don't know, just because it does have a big impact in the area. But I just think this is so interesting. One of the big reasons that they're really struggling with is retirement benefits, and I think the reality is for maybe those that are unaware. If you work at Boeing and you're listening to this, you're very well aware. But they froze the pension in 2014, right? So, or a number of years ago, I think it was 2014. And so people's pensions were no longer growing at that point. And although you can get your pension if you were entitled to one at that point, it hasn't been growing. And anybody newer is not getting a pension, right? They're getting a 401k. And that's one of the biggest things that they're fighting with right now when they're debating how they're going to solve this with the that is that they want a pension back, and Boeing doesn't want to give it. And the simple fact is it's an expensive thing to offer, right?
Sure.
I mean, that would be a large financial burden on Boeing. And the article makes that point in a couple of different ways, but I think it's so telling that they want the pension back and they're willing to continue to strike because of it, even in spite of some of the things that have been offered. And I'm gonna bring this full circle in a second, but let me read this. This is from John Holden. This is a quote. He's the president of the District 751 of the union. It says, "I believe all workers deserve a defined benefit pension, and it wasn't right to take it away, and it's a righteous fight to try to retrieve it back." Now, I think it's interesting what Boeing has offered. They've offered a few things. Here's one of them. Retirement benefits have become the biggest sticking point in the impasse between Boeing and its workers after the company came close to meeting the union's demand in other areas, including offering raises of nearly 40% over the life of the new 4-year contract. That is massive. That 40% over the next 4 years, and yet it's not enough to close the deal because they want the pension back. And I think that really tells you something. Those of you that are going to have pensions, count yourself lucky, because that is a dying breed, and it is what a good piece of what makes people successful in retirement. Our happiest clients are folks that have multiple guaranteed sources of income, right? And just do me a favor, humor me on this, right? This might sound overly simple, right, as I say this. But if you think about your retired life, take yourself out of your working life right now. Let's say you're retired, you're 5 years into retirement. Is it really the biggest concern whether or not you've got $1 million or $2 million in your 401k? Or is the biggest concern, I need $6,000 a month to live my life and I have $8,000 a month coming in? There's not a whole lot to be concerned about, right? That is really what everybody's looking for. That is financial freedom. And that's what you need when you move into retirement, is more guaranteed income than the outflow that you're going to create, right? It's not about having the biggest 401k. Ultimately, the only reason you saved and built the 401k in the first place was to create the income. So if we can bypass that, create the income with a pension, then what is there to really be that concerned about, right? Now, that doesn't mean we don't care about the 401k. It doesn't mean we don't want it. That's not the point. But that pension is so important. And it disappearing years ago from what Boeing offers has had a major detriment. And the employees, the union workers have finally maybe brought that full circle and realized that and are now fighting for it. And it'll be interesting to see where it turns out. But I just think that's really what caught my eye here is I knew it was pension related, right? And the article makes that very clear.
Well, and you put the spotlight on it. There are just very few companies that offer pensions anymore. And the fact that Boeing, what amounts to a decade, went away from the pension, and now all of a sudden the workers are saying we want it back. And again, you can't really look into a crystal ball and predict what's going to happen here, but this is a massive company. This is a company that employs a lot of the region.
Yeah.
So if indeed they're in an impasse, I mean, do you see this washing out in any particular way? I mean, I think you bring up a really good point. They're offering like a 40% over the life of the new contract raise to the employees, where in fact you could probably go and pay for your own pension at some point. But I guess where do you see this all washing out?
Gosh, I mean that's a tough question, right? I hope it washes out that they get their pension back, because I just know that that's going to have such a positive impact on all those workers, right? And I mean, you know, there's a lot of people that took early retirements because they wanted to get that pension started because it was going to start going the wrong way. They were going to start losing money in their pension if they didn't retire now. And then they went back to work at Boeing on a contract, right? So I hope that they get the pension back, and I hope they get it resolved sooner rather than later, because a company being on strike isn't good for anybody, right? It's not good for the company. It's not good for the workers, and it's not good for the local economy either, right? Because that has an impact on folks outside of Boeing as well. And even on the greater economy in the country, when you've got a big employer like Boeing, that does have an impact, right? Here's something else. Let me read this quote. I think this is so good. It says, Boeing could increase how much it contributes to its 401k plan, right? So 401k, that's not a pension, right? Different. It says, in the rejected proposal, it offered to make a one-time contribution of $5,000 to 401ks. Okay, that's not huge, but that's something. And then this is the deal right here. This is the kicker. They said they would match 100% of employee contributions up from 75%, that's what they had offered, was 75%, on the first 8% of a worker's pay. So a worker could contribute 8% and Boeing would contribute 8% to their 401k. That's huge. That's probably the biggest one that I've heard of. And maybe there's other ones out there. I'm just unfamiliar, but that's massive to get a 100% match up to 8% of your salary into your 401k. That is massive. And yet the workers are saying it's not enough. We want a pension, right? They're saying you keep that 8%, we'll take the pension. And my point with this is, again, they're understanding. That's what I like about this is they understand the value of guaranteed income. We're never going to have a client come back to us and say, guys, you've created too much income for me. It's not working out, right? I wish I didn't have so much income, right? That's the whole reason you get up and go to work in the first place, is for an income. So what changes when you get to retirement? You have more time and less income. So we got to find a way to create the income. And the pension used to be the solution to that. But with a 401k, now you're on the hook. It's your job. You've got to figure it out. You've got to create the income yourself. Nobody else is going to help you do it unless you go hire somebody to help you do it. But it used to be taken care of inside the pension. That's not the case anymore, right? And so we've got to find a way. We've got to find a way to create that income.
Well, I tell you, Boeing stories are going to be, front and center. And when they pop up, we will be talking about them here on Elevate Your Wealth with Mark and Casey and the team at Elevated Financial Management. Listen, we get it. There are a lot of question marks when it comes to retirement. You need to have that plan. You need to have that confidence moving into your retirement years and work with a fiduciary. The opportunity to get rolling on that or get a second opinion is right now. Casey, we've got the appointments. What's going to happen?
Well, again, it's the same thing that we always talk about because we know that it's what people need to be successful in retirement. It's a written financial plan put together by our team of certified financial planners. That's going to talk about how you can create reliable income in retirement. For those of you that have worked at Boeing or any other company in the area and you've got your 401k and you need to turn it into income at some point, that's who this is for. This is your opportunity to figure out how to do that reliably, how to do it sustainably, how to make sure that that income will continue and give you what you need to go live your life in retirement and not be worried about what the market's doing. So we'll talk about the risk that you're taking in your investments. We'll talk about the fees that you're paying in your investments. We'll talk about what kind of income can be expected. When do you turn your Social Security on? What do you do for Medicare? All those questions, all those concerns that you have floating around, those things that make you worry when you think about your retirement, we will address those in a one-on-one conversation specifically tailored for you. Don't hesitate. Give us a call.
All right, here's the phone number. Grab an appointment, 866-668-3625. Again, that's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Get on track and do it right now. 866-668-3625. Complimentary appointment awaits. 866-668-3625. When we return, Goldman survey identifying the, quote, missing link, end quote, for retirement savers. That's next. Welcome back into Elevate Your Wealth. Your host, Casey Elkins, Mark Stimson, normally with us. He is on assignment this week. You can find them both in Seattle. Elevated Financial Management. Check us out online, efmnw.com. It's a great resource website. Again, all letters, efmnw.com. They've got their TV show links there, Elevate Your Wealth, our radio show and podcast form, all there for you. And again, folks, it's about the importance of being ready for retirement, having a plan, and they are certified financial fiduciaries. I'm Morgan Patrick. We are hitting some hot articles when it comes to retirement planning. Things are going to move the needle. We've already talked about Warren Buffett. We've talked about Boeing and the latest there. Now we move to this, Casey. Goldman survey identifying the missing link for retirement savers, and this obviously jumped at you.
Yeah, this one really got me because I thought that, just the title was interesting of like, ooh, what's the missing link, right? I got to figure out what that is. But then as I read through it, I realized that, this really just, it comes back to what we preach about every week, which is having a plan. That's really what this article says. We see let me read this quote. Actually, it says, it's clear in the U.S. that life happens. Life events and financial obstacles continue to disrupt retirement savings, which that came from Greg Wilson, head of retirement in Goldman's Asset and Wealth Management Division. And he says, our survey shows that many workers are not adequately prepared. So how do you become adequately prepared? It's about having a plan.
That's the $1 million question, right?
Yeah, that's it, right? It is. And that's the thing. This article goes on and on about having a plan and how that has an impact for each of these folks here. And I don't want to bore our listeners or bore you, Morgan, with like the numbers of all of it, but there's a couple things in here that I feel I've got to say because I just think it's so valuable. It says Goldman survey included 4,874 respondents, so almost 5,000 people, right. A mix of some that were working, some that were retired, 3,200, 3,300 that are working, and roughly 1,600 retired individuals. It says among the working respondents, those who create a financial plan are not only more confident about managing their savings, but they save more for their retirement. That, to me, that's really interesting that they actually save more for their retirement, right?
Think about it, Casey. We talk about it almost every single week. There's so many people that are doing a pretty good job of saving, but it's like they're just throwing their money into their, into their vehicles, their 401ks, their IRAs. How's it working? How's it gonna work for you as you move towards retirement? Having a plan, having a roadmap. It's kind of like that, that description we always say, if you're on a trip and you've got it mapped out where you're going to stay, what you're going to do, maybe a restaurant you're going to hit, you go into that trip with confidence. If you just get in the car and go, how's it all going to work out for you?
Exactly.
You don't know.
Yeah, you don't know.
So planning, it works.
Right. And you know what? I like that analogy that you just brought up because, who's more likely to hop in a car and just by the seat of their pants take off and go for a drive across the country or to some other state, right? From an age perspective, that's probably a younger person, right? Because they can deal with the risk probably that comes with that better than somebody who's retirement aged. That's the same thing when it comes to investing. If you're 25, 30, 35, 40, and you're just saving and throwing money in your 401k.
Spontaneity.
Yeah, right. You're doing the right thing. That's okay, right? If you're approaching retirement and you realize, man, I'm just saving in my accounts and they're growing, right? They're growing, which is great. That's perfect. That's what they should be doing. But don't you have questions about how taxes are going to affect that when you start taking out? Don't you have questions about how much income you can actually get, how it's going to affect your Social Security? Should you do a Roth conversion? All these kinds of things. That is when all of this becomes so much more important. When you're actually approaching retirement, when you're 10 years away from retirement, 5 years away from retirement, that's really what this comes down to because you don't have the time to make that mistake. You don't have the time to deal with the downturn. If we have a 2008 correction, a 2000 correction, or one of the other 14 bear markets back since 1929, if we have a correction like that in the market when you're going to retire, you don't have the time to recover if you're just 5-10 years from retirement, right? Folks that retired in 98 got decimated in 2000. And if they didn't have the appropriate plan or they didn't have a plan at all, their income was not consistent after 2000, right? And again, let's rewind to that. Let's think about it. Let's go all the way through the scenario. At that point, you saw a lot of folks come out of retirement, and where did they go to work? Walmart, right? Because Walmart's one of the only places that's going to hire retirees, and they were a greeter at Walmart. I don't want that for anybody that doesn't want that for themselves, right? If that's what you want to do, that's great. But I don't want anybody to be forced into having to do that because they didn't plan appropriately. Here's something that I think is interesting. There's a headline in this article or subtitle or whatever it's called. 401ks don't come with advice. That's That's one of the biggest, they don't, right? They just don't. There's a lot of things you can click on and it'll tell you what the holdings are, and you can read the prospectus and have fun trying to figure out what all that really means. Or you can read the Morningstar report. I've seen that. A lot of 401ks offer that now, which is great. But if you're not a financial person, the Morningstar report doesn't mean anything to you, right? That's the same as we were just talking about Boeing. I could read a report from Boeing about an airplane, but it doesn't mean anything to me. I can read it, but I can't interpret it, right? And it's the same with a lot of these things that come inside of a 401k. You can read it, but what does it really mean? And what does it mean as it pertains to you in the context of your life, in the context of your retirement? What do those numbers mean? Okay, I'm a 60-40 portfolio, 60% stock, 40% bonds. Right. What does that actually mean? And what stocks are they and what bonds are they? And how does that actually interpret to income in your life? That's something that a lot of advisors will come back to. Well, you're diversified, you're 60-40. What does that mean to me, right? So what, right? What does that actually mean in my life? How does that
break it down for me? I want somebody to break it down.
That's it. How does it create income in my lifetime? How does it make me tax efficient? How does it make sure that I don't run out of money in retirement? And me telling you you've got a 60-40 portfolio, or you reading a Morningstar report or any of these other reports that come in your 401k is not advice. That is not what that is. That is just tech specs when you look at something, right? It's just the technical specifications of what's there. But how does it actually apply in your life? Here's another one. I thought this was really cool. 59% of retired respondents on this study without a financial plan had less than $100,000 in retirement savings. But only 16% of those with a plan had less than $100,000 in savings. So that's a drastic difference, right? Drastic difference. Now here's the other one. 55% of retired respondents who had a financial plan had more than $500,000 saved, while 20% of those without a financial plan had saved that much. So 55% of those with a plan had more than $500,000. 21% without a plan had saved $500,000. It's more than double.
It's
right?
in the numbers.
Yeah, right. It is. And
I mean, think about it. If you are working with professionals, if you're working with a fiduciary that does this on a daily basis, or you're out there by yourself, you've got your own work day, you've got your own stuff going on, and you're trying to do it yourself. I mean, you don't know what you don't know. And there are a lot of us out there that don't know much outside of what we do for work. So when you have a plan, when you're working with a fiduciary, with someone that works in this sphere, this area of retirement planning, they've been there, they've done that, they've walked this walk, and they can advise. And again, that gives you confidence. We talk about that planning as you work through, and these numbers show that. These numbers in this survey, and again, it's the survey, but these numbers show that a professionally guided plan, the numbers, well, they're proving the point.
Right. They are. That's it. Right. And, I'll just say this. I think maybe there's folks that are listening to this going, okay, well, here's a study by a financial company that obviously wants you to invest with them. And then I'm listening to a radio show from a financial company that is talking about this study, right? And it may seem as though Goldman is serving their own selfish purposes with a study like this and others and that kind of thing. But I think the reality is this. It's about having a plan. Even if that plan isn't with us, if it's not with Elevated Financial Management, have a plan.
Yes.
The statement stands true, whether that plan is from me or from somebody else, because that is what's going to create success for you in retirement. Because it's about having the confidence to actually retire and understanding how it's going to work and understanding how all these parts and pieces work together. And if you already have a plan, that's great. I'm ecstatic for you. The truth of it is, very few people already do. True. And when folks come in here and say, I have a plan, I just kind of want you to give me a second opinion, because we do that. We're happy to do that. No problem. They don't typically actually have a plan. Very few people do. They've got a report.
They've got an idea.
Yeah, they've got a spit out from a computer program that said, oh, well, if the market continues to average a 10% return over the course of your retirement, you're going to be successful. You didn't need to see a financial advisor for that. I could show you that in an Excel spreadsheet and everything would be dandy, right? But the reality is what if the market doesn't do that? That's the question, right? What if we don't have the same returns for the last 14 years for the next 14 years, right? What if it's a completely different set of returns? What if we have the returns from 2000 to 2008? What if we have returns from the 90s? What if we have a return like the Nikkei did in Japan that still hasn't recovered? Then what? How is your retirement going to look? And that is what the plan has to be. The plan has to account for all those parts and pieces, how they work together, and what it looks like when things don't go the way you want them to, right? Because if everything goes the way we want it to, well, then that's great. There's not a whole lot to really be worried about. The market will continue forever. The S&P 500 will continue to go off, and we'll have companies that just do well endlessly. But I think we all know that that's not reality, right? So we have to figure out how to be successful despite what the market does.
Yeah, I mean, when you think about it, it's so important just to, you said it, the what ifs, plan for it, and maybe the what if doesn't happen, but at least you're going to be ready if it does. So have the plan, be ready. Opportunity to get on the calendar right now, Elevated Financial Management. These are complimentary appointments. Casey, Mark, their entire team ready to help. Again, if you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Casey, kind of walk us through how the appointment's going to go.
This is an opportunity for those that want to solve that missing link in their retirement plan, right? So, or in their retirement savings. Those that don't have a plan. Or maybe you feel that you do have a plan and you just like a second opinion. That's okay too. But this is your opportunity to get something custom tailored for you. You can leave your checkbook at home. There's no obligation. There's no strings attached. We will sit down and talk about where you're at and where you'd like to be and see if there's anything that can be done to improve your situation. It's really as transparent as that. We've got a great staff. We're easily located right here in Renton between I-5, 405, 167. We're easy to find. We've done that very intentionally to make sure that we can help as many people that want help. So this is your opportunity to get a written financial plan put together by our team of certified financial planners. Please feel free, pick up the phone, give us a shout.
Down to earth, comfortable conversation about a very sensitive topic. It's your money. We get it. But these are complimentary appointments with fiduciaries. Sit down, map it out. 866-668-3625. Remember what we said? You don't know what you don't know. 866-668-3625. We'll grab you one of those complimentary appointments. 866-668-3625. When we return on Elevate Your Wealth, it's time for Retirement Scenarios. Elevate Your Wealth. Your host, Casey Elkins and Mark Stimson. 42 years combined experience in the retirement planning business. They're certified financial fiduciaries. And again, Elevated Financial Management, their home right here in Seattle. Check them out online. It's a wonderful resource website, efmnw.com. All letters, efmnw.com. Again, their TV show, links are there for that. Also, our radio show in podcast form. They also have a new website, and this is an awesome thing when it comes to taxes. We're all concerned about taxes. Taxbillseattle.com, taxbillseattle.com. Casey, before we jump into scenarios, which I'm looking forward to, why did you feel like, you know what, we want to do taxbillseattle.com?
Yeah, thanks for bringing that up, Morgan. I do appreciate that. I think the reason that this really struck home for us is that we talk about taxes a lot here because taxes and inflation, those are going to have tremendous impacts, right? Retirement's all about income, but what takes away your income? Taxes and inflation, right? So we've got to figure out what we can do about taxes to lessen your taxes in retirement, not just lessen your taxes for the last 12 months, right? Everybody's kind of used to looking at it in the last 12 months and, well, how can I save $1,000 over the last 12 months? We want to look at this from a longer time frame. Over the next 30 years of your retirement, what can we do to save you 10, 20, 30, hopefully more than that, thousands of dollars, right? And so that's really where this comes from. And it's a nice tool because it doesn't require you to pick up the phone and call and and do anything like that, you can go to the website, you can put in your information, and it'll run some calculations and give you an idea of what you could do or how you could save or what you could save in taxes if you make some changes, if you're willing to bite the bullet, as it were, and actually take action. And so it's a nice way to dip your toe in to kind of see that. And here's the reality. We are in one of, if not the most tax efficient windows that we're ever going to see in our lifetimes.
Yep.
This is something that we have to take advantage of now. We know that current tax law sunsets at the end of 2025, and that's pending that they don't put any other changes in before that, or who knows what this is all going to turn into. So this is the opportunity. This is your chance, and this is a very low bar of entry way for you to see what you could do if you're willing to take the steps to do it, right? That's what it all boils down to. We talk about all kinds of things that you could do on this show all the time, but if you never take the action, it really doesn't mean a whole lot, right? It's kind of the same during the break, right? Morgan, you and I were talking about losing some weight. You know,
Yeah.
I need to lose a few pounds, right?
Yeah.
And I think probably most people fall into that category. And you know, we're in the gray stages of the Seattle weather, so it's pretty easy to put on weight at this time. But I will say that people can tell you all day long how to lose weight, but if you don't take the action, it doesn't mean anything. Right. And it's the same thing from a financial perspective. I can be on this show every single weekend, multiple times on a weekend, telling you how to change your investing strategy, how to create income in retirement, how to better yourself. And if you never take the action, it doesn't mean anything, right? And so that website is an opportunity for you to dip your toe in and see what you could get if you did take some action, right?
taxbillseattle.com, taxbillseattle.com. And I love the parallel with, what we're talking about just during the break, and that's, dropping a few pounds, being a little bit more healthy, and having those types of conversations and making ourselves accountable because we're saying it out loud, but also writing it down, having a plan for our own health. Same thing can be said for the health of your retirement. Have a plan, have a roadmap. Again, that GPS we talk about so often, get you there, and so you can enjoy your retirement. There's going to be an opportunity to get on the calendar with Elevated Financial Management. It's during the course of this show. These are complimentary appointments. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number now. Move to the front of the line. 866-668-3625. That's 866-668-3625. You're leaving the checkbook at home. This is complimentary. You're not agreeing to become a client. This is an opportunity for you to kind of get some information, see kind of where you are. And if you need a second opinion, jump on it. 866-668, again, 3625, the final four digits there. All right, so we've got some scenarios. Now, remember, you may hear a scenario on here that's similar to what you're going through. But guess what? I say it every time. It's not exactly what you're going through. So take everything with a grain of salt. Grab one of these appointments. Talk about your own scenario. Do it with Casey and Mark and their team. All right, so here's the first one. Is there a good rule of thumb, Casey, for how much of an IRA should be invested in safe investments? I'm at age 60, or is it just a matter of personal preference?
There's a kind of a yes to both parts of that question. So, we do talk about the rule of 100. And what that really means is we take the number 100 and we subtract your age. And so if you're 60, we subtract that from 100, that leaves us 40, right? We don't want more than 40% of your total assets at risk for loss, right? So we want to find a home for that other 60% to be protected, to be producing income, to be set up in a way that you're not open to downside market volatility. So that's a general rule of thumb, but I'll tell you what, we stray from that all the time because personal preference is very, very important to what we do, right? If we just stuck to the rule of 100 or any rule kind of like that, rule of thumb like that, you could just plug the numbers into a computer and it'd spit out a result for you and you'd go with that and it'd be fine, right? But the reality is it's got to be custom tailored. Whatever it is that we do as financial planners has got to be built with that specific client in mind, right? Not a specific age group in mind, not a specific subset of retirees in mind, but that specific client, because everybody's individual circumstance is unique, right? So you may be 60, the same as a number of our clients are 60 years old, but when are you actually going to retire? What type of risk appetite do you have? How much have you saved, and how much does that actually allow you to take risk, right? If you've got a larger nest egg, well, you can maybe take a little bit more risk because that's not going to have as drastic of an impact on somebody who's got a smaller nest egg saved. So there is a lot of individuality to the plans that we build, and that's very intentful on our part, right? That's by design, because we want it to be custom tailored for each individual person that we talk to. And that's why we offer what we offer every single show, is to sit down and have a conversation with us. Otherwise, I could just have you fill out a form and I'd kick out a report and go, here you go, and you'd be on your way and everything be fine, right? But that's not what we do. What we do is custom built, just like a custom tailored suit.
Yes.
It's specifically built just for you and what your goals are and what you want to do. And so there is a general rule of thumb, but really an entire plan, not just around safe investments, but an entire plan has to be custom built for that individual client.
I love the picture you just painted, because if you're going into, let's say, if you're a male listener and you need a suit, and you've got a very important event, in life it would be your retirement. But let's say you're going to a very important event and you want to look your best. At that event, you're going to get a tailored suit. You're not going to go in and say, I'm going to just pick something off the rack without any help at all. Maybe try it on. Maybe it looks good. Maybe it doesn't. I want something custom. I want it to be fitted to me. And the same thing goes for retirement planning. Everybody's going to be different. What are your goals? What are we working with here? What materials do you have that we're going to create this customized retirement plan? And how it's all going to work together. Again, there are so many puzzle pieces that you have to consider. Working with a fiduciary and putting this puzzle together, that's retirement planning. And the opportunity to get on the calendar with Elevated Financial Management and have that type of discussion and do it complimentary, right? You're not agreeing to become a client. You're just kind of kicking the tires here. You're getting educated on what is retirement planning as it pertains to you. What's the value of that? You think about it. It is your retirement, and you have a way of dipping your toe into that retirement planning pool. And if you want to jump in and swim, you certainly can do that. Here's the number, 866-668-3625. Take advantage of one of these complimentary appointments. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Grab an appointment right now, 866-668-3625. All right, let's jump on our next scenario, and here it is. I'm the guy who never opens the investment account statements. I'm scared to look, and because I don't really know what I'm looking at anyway, how do you help a person like this, Casey?
Well, it's a 4-letter word. You might be able to guess what it is. Starts with a P. It's a plan, right? That's why people don't look at their statements, because they're scared. And why are they scared? Because they don't have a plan. They don't know what it means. Even when things are going well, they're nervous because they don't know what to expect. They don't know how it works. And ultimately, here's the key. You don't know how it's going to affect you. That's the big thing, right? And so we have folks that cross the threshold into our office every single day that are just like this. They don't look at their statements. They don't look at their accounts because they don't know what to expect. They're nervous. And we have folks that come in that look at their statement every day, that look at their accounts every day. But I tell you what, why do they look at it every day? It's probably the same reason. They're nervous, right?
Yes.
They don't know what to expect. It's the same thing. And so it's a plan that allows you to monitor your accounts with confidence, because you know that there's levers to pull. There's airbags to deploy if things don't go the right way. There's options, there's detours, there's reroutes to take. And that's what a plan does, is it gives you that confidence to feel comfortable, obviously when the market's doing well, but also when the market's not doing well, or when the market's stagnant, or when something in our life changes, right? What if it's not the market that creates a hiccup for retirement? What if it's something in our personal life? What if it's my kids moved across the country and I want to be with my kids and my grandkids? Well, I got to sell the house, and how's that going to affect things, right? What if it's illness? We see that all the time, right? And it's heartbreaking to see, but we emergency where one spouse gets sick, something happens, and there has to be an adjustment to that retirement plan. But it's a plan, it's an initial plan that gives you the confidence to be able to deal with any of those roadblocks or trials that come up.
Let's help some people out. We've got appointments. They're complimentary. Casey's going to walk you through how they're going to go. Again, these are very comfortable. These are sit-downs. This is an opportunity if you really to see kind of where you are. Case?
Well, this is your opportunity, again, to get that custom-tailored plan built just for you, something custom designed to what you need, to what you're looking to accomplish. So it's a written plan put together by our team of certified financial planners. We will sit down and have a discussion with you and talk about what your goals are and talk about your individual circumstance, what kind of income you need in retirement, all the things that we've discussed on today's show. Maybe you're retiring from Boeing and you have a pension, or maybe you want a pension. Maybe you're retiring from somewhere else in the area and you don't have a pension and you'd like one, or you'd like to figure out how to create the income. This is your opportunity to ask those questions and get advice from experts specifically tailored, custom built to your individual circumstance. Don't hesitate. Give us a call.
Here's the phone number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. These are complimentary appointments. Leaving the checkbook at home, 866-668-3625. Another edition of Elevate Your Wealth is in the books. For a on assignment Mark Stimson and Casey Elkins, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.